What's happening, guys? Welcome back here to another pre-week market analysis. This is Corey Smith speaking with CoreFX, coming to you with T3 Live's YouTube channel. Gonna do a quick little breakdown again today. Release these videos every weekend to get you started and prepared for the Forex trading week ahead. I go over what happened in the prior week, strongest and weakest performing pairs, what's going on fundamentally as well as technically, and then I move forward into the week ahead. Let you guys know what events are worth watching for, what events you could trade around, or know to manage your trades around them, or exit trades prior to the events, or also I show you some technical setups and charts that I'm looking at for the week ahead. So thank you guys for taking the time to watch these, and I'm going to go ahead and jump into it. So starting with last week, we had really an overall risk off moves in the currency markets throughout the week. As we could see, the safe haven currencies of late, especially the yen and the Swiss franc, we know are safe haven currencies. The euro has been of late, and then we've got the New Zealand, Aussie, CAD, the growth currencies, all underperforming. So the risk off theme really showing itself here in the forex markets. We had the yen, euro, and Swiss franc as the strongest performers, like I said, and then the New Zealand dollar, Australian dollar, Canadian dollar were the bottom three performers. As you can see here, as far as percentage basis, how big these moves were. It was a decent week in the FX markets. We got some pretty good moves. But hopping into the index charts here, beginning with the US dollar. We had a strong bearish move lower this week. It did break this black upward trend line, and now it is broken and closed below really this blue neckline here of this inverse head and shoulders pattern we've been watching. So a real change of events this week for the dollar. 50 SMA is acting as support right now, and technically this uptrend is still valid. Moving averages are still pointing upwards, even though the 20 is starting to roll now. 20 is above the 50, and price is still trading above the 50. So we'll have to wait and see. If we get a bounce higher here, we could expect this uptrend reversal to continue. If it rolls over, breaks this 50, and continues lower, I'm going to switch my bias now to a downtrend for the dollar and start looking more on the long side of shorts. All in all, we got to let price tell us what it's doing. Never anchor yourself to any one belief or try to be right with the markets. It's just about making money here. So try to follow where price goes and be on the right side of price action. Taking us over to the euro, basically the exact same story. This head and shoulders reversal broke lower, broke the neckline. We formed this basing pattern here that last week we thought could break to the downside and continue this reversal, but it did the exact opposite. It broke up and out of this low basing pattern here, above this neckline, support turned resistance, and is now trading in a tight range up here around the 50 SMA, back up above this neckline. So again, still not calling off this downtrend that we switched over to here, but if you throw a little trend line in, you can also see that it broke this trend line as well, and pushed higher. The 50 SMA is holding ground still, so we'll have to wait and see what it does. But until the dollar or the euro really show us something, still going to remain with a neutral bias for right now, just because really we just need more clarity. If this price comes up this week and breaks this resistance here around 115 level and it moves higher, then we'll be above the moving averages. The 20 will be curling back up to the 50, and we'll be back in this uptrend. This will just be a deep pullback within it, but we'll have to wait and see what happens there. Japanese yen, again, we were down here in this low basing pattern. After these strong moves lower, we were expecting a potential break to the downside and continuation of this downtrend, but price did the exact opposite. Broke upwards, strong moves out of the yen this week, have broken above the 50 SMA, and we're now back below this strong resistance level at 86 here. So we'll see if price is able to break up and above it. It'll also be on the 200 SMA, so really strong level we got here. I'll have to wait and see what price does, but another one here where there's the clear trend we were in has now switched up a little bit, so no clear trend and no clear obvious bias to take. So we'll just have to wait and see how the yen reacts this week. Pound, we are still range bound. In this range we've been in for over a month now. All through October and in November, we've been in this range for the pound. We've had a whole bunch of mixed signals coming out, from a rate hike for the first time in a decade to mixed data, but stronger data now. Brexit negotiations starting to seem like they're going somewhere. So I'm seeing fundamentally and really somewhat technically, I'm seeing a continuation of the rise we've seen in the last few days of the pound. I think we'll come up, retest this resistance, and break out and continue back to the uptrend. But we'll have to wait and see how the data comes out of the pound. That's going to be the real deciding factor, as the Fed's really the Bank of England's really data dependent right now, as with any central bank in the world at this moment. Canadian dollar has still been respecting this downward trend line. As you can see, we trickled lower this week. No strong momentum moves, but we're following this 20 SMA and this trend line nicely and just slowly trickling down lower. So I am expecting price to come down and retest these lows here. Oh, grabbed the wrong tool there. I am expecting price, though, to come down and retest these lows here, as we're in a downtrend now, and could potentially bust lower and make a lower low. But all in all, I am expecting price to continue this downward move. Again, I'm not tying myself to that. If CAD opens the week, breaks its trend line, starts moving higher, then I'm obviously switching my bias with price. But to develop a bias to begin the week, I'm going to have to assume this will continue the downtrend and retest these lows that we've got here at 76.50-ish. Taking it to the Swiss franc, we've had a strong sell-off in the franc the past few months. Hit this support, rallied up. Last week we thought it could come back down and retest the lows, maybe push lower, but it actually moved a little bit higher and is now sitting at this resistance level. We did break this trend line, but this was a really strong trend line, so that break isn't that big of a deal. We're still well below the 50 SMA. 50 just crossed under the 200, and really just retesting this strong resistance. Just a decent pullback here within this rally here. Within this downtrend. So we'll have to wait and see. If you take the fib out here, it looks like from this prior strong move lower, we are at a fib zone. Yeah, so we hit the 50 fib, so it's in a good spot to continue lower from here and retest these lows back down here. But we'll have to wait and see how the week goes, what price action is looking like. If it does blow above this resistance, then I would be more bullish in the short term. But to start the week, I'm going to look for it to bounce off this resistance and continue lower. Australian dollar did what we thought. Not many pairs did what we had biased beginning last week, but Aussie was one that did. We've been in this downtrend now, lower low, lower high, lower low, lower high, and we were in this range last week saying that it could break out of the bottom of the range and set a new lower low, and that's exactly what we got. Price came down, set a new lower low, has now hit support. We could either see a rally back up to retest this with a lower high, retesting the broken support now resistance, or it could just base around down here, move sideways a little bit, and then continue lower, or it could reverse sharply back up and come back up above this support turn resistance. So we'll have to wait and see here, but definitely a bearish bias for the Australian dollar here. New Zealand dollar as well. We rallied up last week, retested this resistance, and I said we could come back down and retest this support level. This is a strong weekly support as well as a daily support. As you can see here on the weekly chart, this is held for a long time. So this is going to be a real strong zone to watch here. But as you can see, we did break and close below it here at the end of the day on Friday. So we did have a break and close below this level. Now it could be a outside reversal. It could just bounce right back up and into this range. Or we could see a follow through to the downside now that this support's been broken. There's no floor holding it there. And really, I'm more bearish than anything on this setup. And I will be looking for weak New Zealand dollar this week. But that about covers the currencies. S&P 500, we had a down week at first, but then we came back and recovered a lot of the gains Thursday, Friday. Wednesday, we did sell off pretty sharply back down here to test this 25.60 level. All in all, still in an uptrend. This is showing this trend line breaking, but really we are still in an uptrend here. And you can see that price is in a bull pennant, so nothing's really changed with U.S. equities. We're still looking bullish in every way possible. So continue to look for that. This week we had the risk-off theme and a little bit of a sell-off, but I expect some confidence and bullish price action to return next week. So we'll have to go ahead and keep an eye on U.S. equities as they do directly correlate to the Forex markets. But nothing really has changed week to week as far as that goes. So now hopping into the news for this past week. Not the craziest week, and next week ahead is a holiday week in the U.S., so it's not going to be very crazy either. But quick little breakdown. Sunday, there was nothing really going on. I wasn't trading or even looking at the charts to make any trades. Just checked on them to set up for what I'll be looking at later on in the week. But nothing really happened on Sunday. Monday, we had Crota speak. This was a kind of not really a planned event, but he spoke at a university in Zurich. Nothing really came out of that. No real strong moves or anything. The NAB Business Confidence Report out of Australia. Again, this was a survey of businesses in Australia to see their confidence level, the business environment, and this report actually blew it out of the water. Um, the report started in 1997. They started doing this report, and this is the highest reading they've ever had of the report. So in 20 years, this is by far, hands down, the most confident businesses have been in Australia. That's including all through the early 2000s and everything, before the financial market bust, everything. This is the best they've seen their business climate in Australia in 20 years. So that is really saying something. Although we've seen a weak Aussie of late, and central banks not in any rush to hike rates because they're waiting for their economy to recover and everything like the rest of the world, this is really saying something. This is really showing us that the businesses and the economy is looking great from the business standpoint. So this is something very good that I'm seeing out of the Aussie here. So something to keep an eye on and watch for as we keep continuing following the data coming out of there. So that took us straight into the Chinese industrial production reading. Again, this affects the Australian and New Zealand economies the most, as they're the most interrelated. But China's one of the biggest economies in the world, so any numbers coming out of there is going to have a direct impact on the overall investor sentiment, which is this risk on, risk off theme we talk about. Their industrial production did slightly miss expectations, but is basically right on point. This slight miss could have some kind of a tie into the risk off theme we saw Tuesday and Wednesday in the equity markets around the world, but not really too much to call home about, as it really was right on par with expectations, just barely missed. But yeah, so that was Chinese industrial production. This took us into German preliminary GDP. This is the first reading of GDP for the quarter, so it is going to be the most volatile, and they actually beat expectations pretty strongly, 0.8% versus the 0.6 expected. So this was a great report out of Germany, one of the strongest countries in the Eurozone. So great news for the Euro. This kind of jump-started the Euro's bullish week that we had here. Taking us over next into Swiss francs PPI. This is their producer price index, inflation number, beat expectations as well. This is good sign for inflation, showing it's starting to pick up in other areas in Europe. Pound CPI, however, was followed, and their CPI and PPI inflation numbers. CPI missed barely, but 3.0% as opposed to 3.1, and their PPI did beat expectations. So a little bit of a mixed batch here with their inflation numbers, but CPI missing expectations was really what we were looking for. But what we got was initial weakness out of the pound, which quickly reversed to strengthen, and then as we saw, the pound was pretty strong all week. So the market's really shrugging off this weak number here. I doubt they're weighing in more the PPI number, as the CPI is more important, but just showing that the economy is still strong in the UK. And when you see a currency shrugging off weak data and continuing to push higher, that is a very bullish sign that if bad numbers can't pull it down, what's going to, and it's going to continue moving higher. It works the same way with the opposite direction. But after that, we went into the central bankers speaking on Tuesday. All four of them spoke. Nothing really too crazy going on with them. They did all four of them consistently say that they will remain transparent with investors in regards to future policy decisions. So they're basically just going to be open with their decisions and let the markets know, and aren't going to catch us by surprise with anything as far as they tell us. So really just maintaining the consistent, steady path they're on with the quantitative easing out of Japan, Europe, and the U.S., and just going to continue staying up to date and keeping everybody up to par with their outlook on interest rates and what they're going to be doing with the central banks moving forward. Taking us to the U.S. dollars PPI reading, producer price index, again a big inflation number that we're following very closely right now. Beat expectations pretty big time. Expecting 0.1%, we had a 0.4% growth in producer price index. So this is a strong inflation reading for production in the U.S., and we saw some strength in the U.S. dollar after it, but it didn't hold on to it, and the U.S. sold off pretty hard after. Again, this is the exact opposite we're seeing as the pound, so we're getting good news to typically boost the dollar, and it's getting a bearish reaction. So this is showing some heavy bearishness on the U.S. dollar. So we'll have to keep an eye and wait to see what we do moving forward here. Japanese yen preliminary GDP, they missed expectations, but not by much. Didn't really cause too much going on in the markets, but still something to keep an eye on. This is the growth of their economy quarterly. This is the first preliminary reading of it. So even though this number could be adjusted upwards, it still shows that GDP is not even coming into their keeping up with their par. So again, stuff that the Japanese bank is going to be keeping an eye on back in Japan to monitor interest rates, monetary policy decisions. Their stimulus isn't slowing down anytime soon, and they're not changing their interest rates anytime soon either. And numbers like this are going to keep them on that path. So until these numbers start beating and inflation and everything starts picking up, Japan's not going to be really doing much of anything as far as the central bank goes. Australian dollar, their wage index missed expectations. Another thing fueling to a weaker Aussie. They're not getting wage growth that they would like to see. So this missed it pretty badly. But it's a low reading regardless, and they're still not able to meet those expectations. Wednesday, we had out of the pound their jobs reports, their average earnings index. This is how much employers are paying their employees. It beat expectations on the wage growth side, so wages are continuing to grow, which is a good sign, and it beat it on the unemployment side. So only 1.1 thousand claims of unemployment changed as opposed to the expected 2,000. So less unemployed than they were expecting, higher wage growth than they were expecting, and unemployment rate still remains at the really low 4.3%. So great signs out of the pound. Pound was weak initially off of it, but then it did rally and gain strength for the rest of the week moving forward here off of it. Then that took us over to the USD CPI, Consumer Price Index, the more closely watched inflation reading. And as you can see here, it was right on par, except for the core retail sales was slightly lower than expectations. So, retail sales, sorry, CPI was right on par, and then the core retail sales was just below, and then retail sales beat expectations. So a little bit of a mixed basket there. But the inflation numbers were lower, which isn't really good sign. The not beating these expectations isn't going to make the Fed any more likely to hike rates. The target's not going to be getting hit as soon or fast as they would have hoped or expected to with the aggressive hike cycle they have scheduled for the next year or two. So as long as these lackluster numbers keep coming in with the CPI and PPI, the dollar probably will continue to roll lower. Retail sales, again, they were mixed. Regular retail sales beat it, but when you take it out and just get the core reading, we missed. So a little bit of a mixed basket there, but nothing really strong enough to get the dollar out of the slump it was in this week. So it continued to roll over. That took us into the Australian jobs reports. It was a mixed report. They had much less jobs created in October than they had expected, but the unemployment rate did tick a little lower. So they had real choppy price action after it as investors tried to digest the data. And then a little bit after the report and overnight, the Australian dollar was extremely weak. This miss right here is most likely why. That is a big difference from the expectations in jobs created. So they barely had any jobs created in the month of October, and they're expecting just under 20,000. So that's a pretty crappy number there for the employment sector, which has been one of the only very strong areas of the Australian economy. So something to keep an eye on. Thursday we had pound retail sales beat expectations, and we continued to see the pound strength off of this prior to the news, but then after the news we saw a little bit of a sell-off. The pound was just a little bit overextended, had moved up pretty significantly across the board, so there was just a little bit of a sell-off, and this was a little bit of a buy the rumor, sell the news. People were buying into the event, and then after the numbers came out, people took profits and got out and saw a little bit of a sell-off in the pound, but no real crazy sell-off or anything. It was just typical market ebb and flows. Then we had the European CPI. This is the Consumer Price Index year-over-year reading out of Europe. Right on par, 1.4%. Again, this is a low expectation. 1.4% inflation is a very low number, and they're just barely hitting it. So not really too much inflation picking up, but it wasn't really anything insignificant either way as it hit expectations and wasn't the craziest report either way. Then we had the U.S. dollars Industrial production month over month beat expectations pretty big, almost double what we thought it was going to be. So that's a really good sign for the industrial sector of the U.S. and just showing continued strength in the U.S. economy. However, the U.S. dollar does remain weak, and these inflation numbers could be what's driving it. But all in all, the U.S. dollar remains weak, but a lot of the data out of the U.S. continues to be strong. Then we had New Zealand's business manufacturing index, same as that report we had out of Australia earlier in the week. Came in a little bit weaker than expected. New Zealand dollar was the weakest performer on the week, but really wasn't too big of a market mover. Just survey of the manufacturing businesses to gauge the economy, and it came in decently strong, but just a little lower than what they had expected it to be. And then the PPI numbers out of New Zealand right afterwards did miss expectations as well, which is their producer price index, another inflation reading, and it's just showing very low inflation pickup in New Zealand as well. And the U.S. stocks did recover some of the losses on Thursday from Wednesday, but Wednesday we had a pretty big sell-off in the stock market, one of the worst days it's had in a little while. Takes us to Friday. Again, not much going on this week, but Draghi did speak at European banking at the European Banking Congress. They touched on monetary policy playing a key role in the strong eurozone lately, and all in all, the takeaway from the reading is Draghi sounded very bullish for the European economy. Was just hooting and hollering about how good they looked, using all kinds of very strong wording, strong, robust, all these things we look for in the terminology used and the rhetoric used in these central bankers, and everything was pointing upwards out of the eurozone from Draghi. So that was a really strong sign there for the euro. And then the only other real noteworthy event on Friday was the CPI numbers out of Canada. CPI numbers came in right as expected. Again, we've been seeing weakness out of Canada since they hiked their rates twice. So these numbers not picking up is going to continue to see weakness in the CAD. I'm expecting a weak follow through with the CAD this week, as you know, there's nothing really changing data wise. It's still not looking too great, and the CPI number here just barely meeting expectations, which isn't a very strong reading regardless. It's just showing us that, you know, we're still having this slow growing inflation out of Canada, and we're going to have to look up for a pickup of their data that has fallen off the past couple months to see this downtrend reverse out of the CAD. But still, for the near future, I'm expecting the CAD to continue to sell off. Alrighty, so that takes us to next week. And again, like I said, next week it is a holiday in the U.S., Thanksgiving. So typically, when there's a major holiday in the U.S., or even in Europe or one of the other major powerhouse trading nations, the holiday usually causes a lot of banks to be closed and people to take holiday vacation time, and kind of like when there's a holiday in the U.S., a lot of the U.S. banks, if it's a bank holiday and they're all closed and they're the big trading desks aren't open and the big banks aren't moving their big positions, there's not as much liquidity. A lot of the other banks and markets and all will also know that it's going to be slow, and it'll kind of just be a slow trading day, slow trading week, not really much going on. And those are the kind of moves we don't want to be in. Moves that don't have follow through, setups that don't have clean continuation moves or anything like that. So really be careful trading this week, and don't try to force any trades or look for anything you don't need to look for. Monday, Tuesday, Wednesday could look for some trading opportunities. Second half of the week, I'm expecting to be really not much going on. So I'll go ahead real quick and run down through what's going on this week, but don't look for the best trading week ever. We're getting into the holiday season now, and really not a good time of the year for trading, December especially. So get used to that, get aware of that, and just don't try to force any trades that don't need to be taken. Sunday, nothing going on again. Don't look to even try to trade it. There's no point. I mean, if that's your system and that's your strategy and it works for you, that's fine. But if you're new to trading and all and getting used to this and everything, Sundays, especially a blank Sunday with nothing going on, is not a good time to be trading. Nothing really worth being in the markets for. Moving into Monday, out of Europe, we have Draghi speaking. and he's going to be speaking on monetary policy before the European Parliament, Economic and Monetary Affairs Committee. Whatever monetary policy is discussed, it's definitely worth watching. Could be a dud, could be a big mover. Be aware of it happening, and not necessarily an event to trade around, as it's a speech and not really any one data point dropped on the markets, but definitely something to be aware of if you're opening a euro trade, or even to just not look to trade the euro on Monday, just because you don't want a nice setup to get stopped out by a news spike or something. But then we have the Australian dollar's monetary policy meeting minutes. This again is the detailed report of the last RBA meeting. It's released 2 weeks after the meeting, and it'll just show us the factors that caused their interest rate decision and a little bit more insight into their meeting and what their outlook is on the economy. Good to watch for. Tuesday, out of Australia, RBA Governor Lowe speaks. Um, he's speaking at a business economists annual dinner, so don't expect much. Not really anything important going on there. Um, then we have the inflation report hearings out of the pound. This is something definitely to keep an eye on, as inflation is something we're really closely watching. Um, it's basically just going to be them testifying on their inflation and the economic outlook before the parliament, and just giving their reports on what they think the overall economy and inflation moving forward looks like. So definitely important to watch for the pound, and something worth keeping an eye on. Um, Outside of that, we have out of New Zealand, we have global dairy price index. This isn't really a big deal, and nothing really that we've been watching too much lately. It was a big report in the past, but lately hasn't been anything to watch really. And then Fed Chair Yellen out of the U.S. speaks at a Stern School of Business in New York. Again, not expecting too much. That typically specific policy decisions and all aren't discussed at speeches in colleges and things of this sort. But whenever a central bank head is speaking, it's definitely something to be aware of and to have down on your list of news events to know what's happening. And then we've got on Wednesday, out of the U.S., we've got durable goods orders. Again, this measures the goods ordered by the manufacturers. For durable goods, it's a leading indicator of production. So for the production side of the economy, this is a very good report to watch for. And then following that, we have the FOMC's meeting minutes, very similar to the RBA's meeting minutes I just went over. It's a detailed report of the Fed's last meeting and interest rate decision. It's released 3 weeks after the past FOMC meeting. So definitely something to watch for the dollar, as we get a little bit more detailed report of what they went through in the meeting. New Zealand dollar retail sales, they beat the last two readings. So if this misses, we could see continued weakness in the New Zealand dollar. But if it beats, I don't know if it'd be strong enough to really make a dent in this downtrend of this New Zealand dollar, but it could see a little bit of a rally. Maybe a good position to enter back in some shorts if we get a little bounce higher here. Thursday, we have PMI numbers out of the Eurozone. So this is the Purchasing Manufacturers Index numbers, and it's going to be coming out of France, Germany, and Europe. France and Germany are two of the biggest economies over there. This is a survey of purchasing manufacturers' level of confidence in the business climate. Has been strong in Europe for a while now, so I'm expecting these numbers to continue strong. This could just add to some European strength out of the euro moving forward. We got our second estimate of the GDP out of the Great Britain, out of the British pound. This is a quarterly reading of GDP, and it's the second reading. So not really the most important. The first preliminary one is the most important, and then we have the final after, which is the least important. But this one still, we could see some adjustment in the price, so in the percentage, the pickup or not of GDP. So it's definitely still important to watch, but nothing too crazy. Takes us into European Central Bank monetary policy meeting accounts. Again, same as with the FOMC and RBA. 4 weeks after the ECB's rate meeting, and it's just a detailed report of their monetary policy and the rate decision they made, why they made it. And then we move into the CAD retail sales number. Again, Canadian economy's been struggling lately ever since they hiked those rates. They had strong readings, and then they took a little bit of a downturn. Retail sales is going to be measuring the consumer spending by tracking total sales month to month, and they have missed the last two in Canada, and the CAD has been bearish, so definitely something to keep an eye on. If we get another miss here, we could see a nice CAD short trades here on Thursday. But again, just retail sales, nothing too crazy going on this week, really. And then we have the Swiss chairman of the Swiss National Bank, central bank over there, Jordan, he's speaking at a university, same as like I covered with Yellen. These university speeches and such that aren't specifically on monetary policy topics aren't too much to watch for. But and we have the trade balance difference between exports and imports out of New Zealand following that. And on Friday, nothing really. Business climate out of Germany, but not really any tradable events other than this. And this isn't really a tradable event either. So, again, holiday week here out of the U.S. Friday and even Thursday. I wouldn't even be looking to make trades. Maybe Thursday overnight, you could look to um, try to catch the euro or pound off of these two reports we got here. Maybe even a CAD trade, but there's not going to be as much follow through as there typically is with these events. And whenever there's a holiday in the U.S., it's just typically a slower trading environment in the markets because there's a lot of banks that are not open when this happens. All right, guys, thank you for tuning in. I appreciate it. Make sure you watch the next video coming out here on the technicals. I cover some of the majors, and some of the other charts I'm looking at moving forward here to get a little bit of an idea of some setups to look for to begin the week. But thank you, guys. I appreciate you taking the time. Again, this is Corey Smith with Core FX Trading, and I'll catch you guys next week.